5 C's, and let's kind of dive into that one.
The 5 C's. And that's a really good point, Jay. I think the more you understand what we're looking at, the more I think it will be helpful for you to say, okay, this isn't that scary. Because I was an analyst, right? I did commercial underwriting, but I remember the best advice I got from a credit officer. Does it make sense? It's like, I don't want to oversimplify it, but like we can use so many ratios, we can look at things so many ways, but at the end of the day, sometimes numbers can be used to explain anything. Numbers are numbers. What does it mean? And this is where everybody can have this conversation. To do that is the 5 C's of credit. So it kind of breaks it down into 5 areas of credit. Starting with character. And I think for a community bank or any bank, character is really important. Credit score, do you pay people back? Capacity is the ability to pay back. And this is where for business and commercial lending, it can kind of get nuanced in that a lot of it has to do with the formulas and equations and stuff. But again, do you have the ability to pay the loan back? And then capital, do you have the capital to put down on a loan? Do you have capital in reserve? So if something doesn't go as planned, you have the ability to withstand the storm. So we will look at stuff like that. Collateral, assets of value you have to put with the loan. It minimizes the bank risk. And then conditions. And this is, again, when it comes to business, it can kind of get specialized. Conditions can be very creative, but at a large, these are the 5 kind of categories that we will look at when it comes to credit.
Basically, going back to condition. So when you look at character, capacity, capital, collateral, all that kind of goes into what the conditions may come out to be.
That's well said.
Because once all that's examined, condition is set, where you might have to meet that based on some of the other areas that you may have a question mark or two. But I think just for our listeners, a lot of times people go in with emotions, but they have to understand that these things are not looked at emotionally. These are things that are looked at very black and white. There's some prep to be done here, I would say.
And to your point, Jay, you bring up a good point. I'm like, wait a minute. I mean, you could do my job over here, right? Because that's a great point in that don't be afraid to take a swing. I don't run into a situation where all of these are met at 100%. There's a weakness in every deal that I've looked at from a credit perspective. And again, it goes back to conditions. That's where, as a credit underwriter, as a analyst, and why there's specialized roles, is to draw up conditions to mitigate the risks that are present in each deal. And that's why different banks exist and financial institutions, because so each bank has kind of their own non-negotiables, I guess you can say, or things that they are less willing to have flexibility with. You won't know that until you go and start having these conversations and being honest. That's the biggest thing, is be honest, because it's my job to, take that honesty, take your story and tell it to whoever's looking at the credit to say, okay, I understand this, but here's why. Here's how we can mitigate that in order to get this deal done. So be honest, don't be afraid, have the conversation and learn from it. Understand why it's important and how you can improve it.
I would say don't be afraid to understand what conditions that you do need to meet. Now, I know we don't want to do this in wasting your time. You're going to help them get this fine-tuned and focused. And maybe they think they're all together. Maybe there may be some things you identified that they're not. That should not deter them from coming to see you.
Absolutely. How we build real relationships. I'm jumping ahead here, but I'm in it to build real relationships, real long-term relationships. With that being said, I have the time in my calendar to educate. Let's meet. Let's talk. Yeah, absolutely.